Get ready, the Fed is going to start quantitative easing tomorrow, and JPMorgan launches a tokenized commercial paper on the Solana blockchain. This is huge news, and there may be some hiccups and problems with the Clarity Act. I'll give you the details and what's happening. Let's get into it. Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as a thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, tomorrow, December 12th, the Fed will officially kick off quantitative easing. So we're going to look at what the impact is on the market. Don't expect anything to happen on the charts tomorrow, but rather it's the start of the money printing cycle. And we could start to see in the weeks coming, the liquidity starting to hit the markets and much more. So we covered this in yesterday's podcast, and we know they're going to buy $40 billion in treasury bills over the next 30 days. So again, it's the start, which is very positive, and let's see what the impact is. We're going to have to be very patient here, but this is pretty historic. Remember, the last time that the Fed ended quantitative easing and went into quantitative tightening, that was in November of 2021, and that is when the bear market started. Now, the opposite is happening here, although you have some people are saying the market has topped out. I personally don't think it has, but we are moving from quantitative tightening to quantitative easing, more liquidity, which should be very great for risk assets. Now, folks, look at this news. This is incredibly bullish. So Coinbase Institutional tweeted out, Wall Street is putting the blockchain to work in capital markets. Today, JPMorgan arranged a U.S. commercial paper issuance for Galaxy Digital on Solana, one of the first debt securities issued on a public blockchain in the U.S. with tokenization, USDC stablecoin rails, and custody powered by Coinbase's Crypto as a Service platform. This is incredible news on multiple fronts. First, huge capitulation by the king of the fiat world, and that is JPMorgan. We've seen their CEO Jamie Dimon bash and criticize crypto for years. Now they have fully capitulated. They tried to create their own private blockchain, but no one wanted to use that because it was another walled garden. Why would I trust your centralized blockchain? Now JPMorgan is forced to use public blockchains because that's where the liquidity is. And that's where a lot of the transactions and settlements are happening, and where you have decentralization that folks can trust what you're building. So this is incredible, folks. This is a landmark moment, and I hope you recognize the significance of this. And we saw JPMorgan was doing some trial and error testing with Base, which is Coinbase's Ethereum layer 2, and they've of course launched crypto trading and much more. In addition, Coinbase, their crypto as a service platform is getting huge adoption. Just a couple of days ago, I reported about PNC Bank launching Bitcoin trading using Coinbase's services, and we know Citibank is also partnered with Coinbase. So all the major banks getting involved in crypto, more on-ramps being established here, more tokenization and use of the technology. Very, very bullish. And on JPMorgan's website, they put out a full press release about it. So how things have changed. Here's what the headline is on their website. JPMorgan arranges landmark U.S. commercial paper issuance on the Solana public blockchain for Galaxy Digital Holdings. Incredible news, folks. And as you all know, game theory will play out here. No bank wants to get left behind. All the other banks will follow suit. So incredibly bullish news. Now, on the topic of Coinbase and Solana, Coinbase will enable decentralized exchange trading for all Solana tokens, no listings needed. So this is a smart move by Coinbase. They're going to allow all those Solana-based tokens, right, whether it be meme coins or whatever, to be launched in their decentralized exchange trading wallet and platform. So that's not the centralized aspect where it's more strict, as far as listings. So the decentralized exchange part makes sense. So this is amazing. We are seeing incredible progress being made here. Now, here's some more details about this news. Andrew Allen, Coinbase protocol specialist, he posted on X about this news, and he said, for issuers and builders, if your token has sufficient liquidity, this means you can be accessible to millions of users on Coinbase without getting listed. So they're doing a bit of this with Base, so it makes sense for them to do it with Solana. It's a very easy model to just move over. And I think Coinbase recognizes the success Pump.Fun is having, so they're building a version of that, not necessarily that they're targeting meme coins, but rather anybody that wants to build on Solana, you can go ahead and do it, and you have liquidity, and they can trade on there. So this is really, really great news, folks. Amazing stuff. Okay, moving ahead, we got more big news out of the CFTC. So they have announced today they are withdrawing the outdated and overly complex guidance that penalizes the Bitcoin and crypto industry. So acting chair Caroline Pham continues to do an amazing job. Yesterday we talked about them approving crypto and as collateral for derivatives trading and much more. So huge progress here. And on the SEC front, SEC Chair Paul Atkins tweeted out, "Our crypto task force will host a roundtable on Monday, December 15th, so that's next week, on policy matters related to financial surveillance and privacy. The event will be in person and live stream on the sec.gov. We hope you'll join us." So let's see what comes out of this roundtable. Privacy is a big factor for the industry. We've seen, things like Zcash start to move. We saw Circle is building a private version of USDC, their stablecoin. And, a lot of institutions, they're looking to build the privacy layers because they don't want all their information out there in the market, of course. So this should be a pretty good roundtable. And the SEC has approved the DTCC plan to tokenize stocks, bonds, and treasuries. So the tokenization race is heating up here, folks. We've been talking about it for years. The token economy, that's where we're headed to. And we're going to see the markets, the governments, and the economies all running on blockchain rails. So whether that be for payments, transactions, all the assets will be on the blockchain, folks. Now, this episode is brought to you by VeChain, which is one of the top layer one enterprise blockchains in the industry that's getting massive adoption. Folks are tokenizing on VeChain. They're building Web3 applications and much more. So they have 5 million plus users, 350 applications built, 486,000 weekly sustainable actions, and they have been around since 2015. They're partnered with Dana White in the UFC. Dana White just this year said he bought $1 million in VET token, and I'm a VET token holder. I have been since 2018, so I'm very bullish on this project. And they're working with a lot of different brands and companies, folks, like Boston Consulting Group, BMW, PwC, Walmart China, and much more. Some of the great features of the VeChain blockchain includes it's scalable, secure, fast, compliant, and purpose-led. So again, doing some amazing things. And recently, they went live with their Hayabusa upgrade and also Stargate 2.0. So the staking, you can do staking via Stargate. So if you're a VET token holder, this is something to check out. And they're making a lot of progress. I hope to have their CEO, Sunny Liu, back on the podcast again to talk about all these great things. So they said here, delivering the full staking experience, Stargate 2.0 is fully integrated with Hayabusa and unleashes a new era of tokenomics/rewards for VeChain and the VET token. So this is really great. So if you'd like to learn more about VeChain, go to vechain.org. Link will be in the description. Now, folks, it's been a very busy week for crypto legislation, especially around the Clarity Act and even meetings. So first up, Eleanor Terrett reported it's a packed day for crypto policies. Senators are expected to hold a bipartisan meeting this morning, and that actually happened this morning, to continue hashing out the market structure negotiations. This afternoon, representatives from several leading industry firms will head to the White House for a separate market structure meeting, according to an email reviewed by Crypto in America. And later, CEOs from Bank of America, Citi, Wells Fargo will meet with senators to discuss curbing interest payments by affiliates of stablecoin issuers along with other outstanding issues. So the banks, we've been talking about it for a while, are trying to kill certain aspects of crypto, right? We saw Citadel Securities send a letter to the SEC about DeFi. We know the banks don't like that you're earning higher interest and yield on your stable coins on crypto platforms than they're giving you in their savings and checking account, right? We know for years the banks have been taking a lot of that money and giving you nothing, right? 0.01 or some whatever garbage, right? It's nonsense. So we got to fight here. So let's see how the pro-crypto senators and members of Congress handle this, because the banks are trying to lobby hard, really, really hard, but they've lost the fight. Now, there is some controversy around the Clarity Act because there's a version that's floating out there that people don't like, and rightfully so, because we know Elizabeth Warren and some of these Democrats who are being lobbied by the banks are trying to, throw some monkey wrenches in there and change up the language. Here, James Murphy, aka Metal Lawman, who I've had on the podcast many times, says, too many people in crypto have the mindset of, I don't care what the rules are for crypto. I just want a set of clear rules adopted and I will follow them. He says, warning, the draft market structure bill circulating in Congress right now all import the very worst aspects of the Bank Secrecy Act into the crypto ecosystem. If we don't fight for our privacy rights now, they will never be reclaimed. SEC Commissioner Hester Peirce has been warning the crypto community starting about 2 years ago not to trade away our privacy rights in order to get crypto legislation enacted. As usual, Hester was right, and that is exactly what is about to happen if the crypto community does not speak up and object now. So some people have been tweeting out things. However, Patrick Witt, who took over Bo Hines' job as the White House crypto advisor working with David Sachs, he called out some of these things that the language in these bills is in the progress of being addressed. He says, replying to Paul Barron here, who tweeted out about this, Paul said the following: the market structure bill circulating in the Senate isn't regulatory clarity. It's the ultimate rug pull. He talked about Elizabeth Warren's language being inserted, and that Senator Tim Scott and Lummis are effectively handing the future over to her to put these nonsense things in there. But Patrick Witt said this is entirely false. The White House, Senator Tim Scott, and Senator Lummis are in lockstep on the need to protect software developers and DeFi. The message was conveyed to the Senate Democrats on the Hill this morning and again at the White House with the industry this afternoon. So we got to watch this very carefully, right? Because again, the banks are lobbying. Elizabeth Warren, even though she's not as vocal, she's working behind the scenes. And again, this goes back to the Gensler days. She was the one doing it. It wasn't Biden. You can't say Biden was, this old man not doing things auto pen, but yet he's leading the charge against crypto. I keep telling you guys, I spoke to many people in DC. Elizabeth Warren had that top financial services seat. Yes, Biden gave it to her, but Biden wasn't waking up saying, hey, go attack crypto. It was Elizabeth Warren getting her paychecks from those banks. And then, same thing with Gary Gensler, her dog on the leash, and they were doing all the nonsense, right? Unlawful activities and much more. So she's not stopping. Remember, she's getting those paychecks from those banks, folks. So we got to see what happens here and keep a close eye, make sure the right things are done. I do have confidence in Patrick Witt and David Sachs, Senator Tim Scott and Senator Lummis, that they can get this done. And look, the industry is getting ready for the midterm election. So anybody who tries to, run alongside Elizabeth Warren, they're going to get their asses handed to them again because the money will be spent. But again, we got to be vigilant here and see how this plays out. Now, there's some more controversy around another bill, the CBDC ban. So GOP hardliners vexed as defense bill advances without the CBDC ban. So this CBDC ban was supposed to go in this bill, so that's not good. A group of Republicans has called foul after the U.S. House passed a massive defense spending bill on Wednesday that omitted a ban on central bank digital currencies, despite promises it would be included. Conservatives were promised explicitly that strong anti-CBDC language would be included in the National Defense Authorization Act. That promise was broken, GOP Representative Keith Shelf wrote on X on Wednesday. So that's not good. The House voted 312 to 112 to pass the National Defense Act on Wednesday, sending $900 billion annual military funding bill to the Senate in a bid to have it passed before the end of the year. So I'm not sure what's going to happen here. Maybe they can get it back or they can put it in the market structure bill. I don't know. But see, guys, well, we have to be vigilant. We have to be vigilant because this CBDC ban is supposed to get pushed through. I remember interviewing Congressman Tom Emmer about this, right? So I'm not blaming him, but just it can't just be him. It has to be collectively they do this. So a lot of drama here, folks. And I'm going to try to get some folks from DC on the pod to talk about all this and what the hell is happening. Okay, another interesting bill that was introduced. Senator Jerry Moran has introduced a bill to establish a task force for recognizing and averting cryptocurrency scams. So this is great. I think we have to have the guardrails in place because you can have legislation and clarity, but if you don't have people dedicated to stopping bad actors, like for every industry, then, the bad actors are going to continue doing their thing. And sure, some of the litigation may mitigate, some of these things, but I think you need a dedicated task force like what they're trying to establish here. So this will be really good. Now look at this, folks. Trust Wallet taps Revolut for crypto purchases in Europe. So again, the on and off ramps being established globally for more capital to come into this market. Trust Wallet, the self-custodial crypto wallet owned by Binance co-founder Changpeng Zhao or CZ, has partnered with European fintech unicorn and digital banking giant Revolut to introduce a new way to purchase crypto assets on its platform. So Trust Wallet users can now buy Bitcoin, Ether, Solana with Revolut through a direct integration, the company said on Thursday, with a minimum purchase starting at €10 or $12 and capped at 23,000 euros or $26,950 daily and per transaction. Trust Wallet's new buy option is expected to provide a faster and easy way to access crypto from Europe. In October, Revolut scored regulatory approval from the Cyprus Securities and Exchange Commission to offer crypto services across 30 European Economic Area markets in compliance with the Europeans Markets in Crypto Assets Regulations or MiCA framework. So folks, again, on-ramps being set up across the globe. This is what you want to see as an investor, and more adoption, more capital coming in, more building, and much more. Moving ahead, Bhutan goes for gold, announces sovereign-backed RWA token. We know Bhutan is very bullish on crypto. They're mining crypto. They're buying crypto. They're doing a lot. And it looks like they're getting into the tokenized gold game here, or a token backed by gold. So man, I can't pronounce this. Jelefu Mindfulness City, GMC, a special administrative zone of Bhutan, announced on Wednesday that it is launching a sovereign gold-backed digital token called TER, T-E-R. The physical gold deposits will be custodied by DK Bank, a digital asset bank regulated by the government of Bhutan and issued on the Solana blockchain network. Again, Solana again, right? We saw JPMorgan is building on Solana. So I'm a Sol token holder. This is why it's important to diversify, folks. So Matrix Doc, a real-world asset tokenization platform, is the technology partner responsible for tokenizing the real-world asset on the blockchain. So folks, it's what I've been saying again and again, right? All these assets are going on chain, the token economy, all of it running on blockchain rails. So I hope you see the direction the puck is heading here, and you have a macro view and you're patient about the market. And here's some news around this Say crypto blockchain. I don't hold Say in my portfolio, but Xiaomi, if I'm saying that right, or Xiaomi, to pre-install Say crypto wallet on millions of phones in global rollout. So I never heard of this. So Say Labs, the core development group behind the Say blockchain, has reached a distribution deal with, again, Xiaomi to pre-install a new crypto wallet and discovery app on all of their smartphones sold outside mainland China and the US. So I guess this is some mainland China phone. I've never heard of it, by the way. Apologies if some of you know about it, but I don't. According to Thursday's announcement, the app will let users sign in with their existing Google or Xiaomi IDs and will feature a multi-party computation wallet for security, access to popular crypto applications, and support for both peer-to-peer merchant payments. Guys, look at what's being built here. We know Samsung and is doing their thing with crypto. It already has a wallet built in, so I'm just blown away at the infrastructure that's being set up here. Now, State Street, Galaxy, and Ondo join tokenized cash race with 24/7 sweep fund. So big names here, and Ondo is a part of it. Many of you know I'm an Ondo token holder. I most recently interviewed Nathan Ullman at Chainlink SmartCon. So we talked about Ondo just, I think, was it this week or last week? The SEC dropped their investigation into Ondo. You know, that was a legacy investigation from the Gary Gensler days. So State Street Investment Management and Galaxy Asset Management are joining forces with Ondo Finance on a tokenized liquidity fund that will push cash sweep balances directly onto public blockchains, creating a potential source of 24/7 on-chain liquidity. The planned State Street Galaxy On-Chain Liquidity Sweep Fund, or SWEEP, is designed to take in and pay out PayPal's PYUSD stablecoin for accredited investors, the company said on Tuesday. Ondo is expected to seed the fund with $200 million, tying a major tokenized real-world asset issuer directly into State Street's tokenization stack. The fund will be powered by Galaxy Digital Infrastructure, while State Street Bank and Trust Company, an affiliate of State Street Investment Management, will act as custodian. Sweep is set to launch on Solana in early 2026. Man, with rollouts on other networks, including Stellar, Ethereum to follow, using Chainlink's cross-chain interoperability protocol. Folks, all of these tokens here I hold. And it's not because I just simply threw a dart at the board. I looked at what their liquidity was, their tokenomics, and the adoption, right? That's so important. So that's why I have Sol in my portfolio. I have some XLM, not as big as my other holdings. Ethereum I have in my portfolio. And of course, Chainlink. Many of you know I'm bullish on this project because every other blockchain and TradFi company is using Chainlink's connectivity, their bridges, their oracles, and much more. So they are building an incredible technology that can be used by everyone in the crypto industry. So this is bullish news on multiple fronts. I hope you guys see what's happening here. I'm not making this up. It's not my feelings or emotions. It's the facts. So again, the reason I'm saying that is you're going to see a lot of comments. People, Solana sucks and this sucks. And it's like, bro, are you here to make money or for religion, right? So look at the adoption that's happening. So just make sure you do your research and take your bets and don't be emotional about these tokens. Just look for the adoption like this. Finally, UAE telco giant EN, if I'm saying that right, taps dirham stablecoin for bill payments pilot. So the United Arab Emirates, a telecom giant EN, is reportedly preparing to test whether regulated stablecoins can support mainstream consumer payments, having signed a memorandum of understanding with Al Maria Community Bank to explore the use of a dirham-pegged stablecoin across its digital channels. Man, look at what is being built here, guys. And it's, again, happening across the globe. So according to a Gulf News report, executives framed the collaboration as part of the UAE's push toward regulated digital finance. Hatem Dawidar, EN Group CEO, said the stablecoin enables instant settlement, complete transparency, and frictionless access. They're starting to wake up. They're starting to get it. They're getting educated. The stuff we've been talking about on this podcast for years, guys. Come on. I've been here since 2016. I started the pod late 2017. We were talking about it and how everything will go on the blockchain because it's just the next layer on top of the internet. It eliminates a lot of the middlemen. It runs 24/7. Instant settlement, transparency. You don't have to wait days for the transaction. And you have a network, a consensus of validators saying this is the exact transaction. This is what's happening. It's real time. So there's no confusion. There's no ambiguity. And all the banks and all the financial institutions and stock exchanges and governments, they are all getting on board, folks. It's inevitable. They got to get on this train or they're going to be left in the old world. The things are changing and we're headed to a more digital world, folks. And, you know, I've often said many times, any country that bans cryptos are writing their economic death sentence because this technology is game changing. It's incredible what's happening. So, folks, you know, if you know somebody who's a skeptic of blockchain or crypto, who's on the fence, send this news to them, right? Let them go research and get educated about what's happening and what's being built by different folks around the globe. Folks you wouldn't even think would be participating, but they are, right? Countries that sometimes you think they're a little bit outdated, if you want to put it that way. No offense to anybody, but you know, that maybe they don't have the infrastructure, but they're looking at blockchains and crypto and stablecoins. And that's because even if they don't have the best cars or the best, you know, roads or whatever it may be, guess what? The people have smartphones, right? That is one thing a lot of people have now, and they're connected on the internet. And that infrastructure is enabled, and that's all you need to participate and move the money. And in fact, you know, it's not necessarily that they are going to have a crypto wallet, but the banks or the services they use already will be using blockchain and stablecoins behind the scenes, and many of them won't even know. So I hope you see what is taking place here, folks. It's incredible. Folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. Hit the subscribe button if you haven't as yet. Be sure to subscribe to my free email newsletter. It is 100% free. I did a write-up this week, and the link will be in the description. It's on Substack. Also, check out my book on Amazon. It's available in paperback and digital. And my course at mycryptocourse.com, folks. Folks, if you want to expand your knowledge about crypto, knowledge is power, this is the course for you. It is packed with tons of value. Lifetime access. You can share the login with your friends and family if you want. Go at your own pace. You can view the full curriculum on the website. It's at mycryptocourse.com. Check it out, folks. Links will be in the description. Thank you so much for tuning in, everybody. I appreciate you all, and I'll talk to you all later.